The story was Ethereum. Like at the beginning of Q3, ETH DATs held like 0.02% of the total ETH supply. And by the end of Q3, they owned a bigger percentage of total supply than even the Bitcoin DATs, despite MicroStrategy having like a 2-year head start. So finished the quarter with like 3.8% of the total ETH supply, which is just like, that's a crazy amount to have bought over the course of a quarter. As far as MNAVs go, I thought it was interesting that, despite Solana DATs and ETH DATs all kind of launching around the same time or kind of riding the same wave. Those MNAVs rose to 4 or 5 at different times, but by the end of the quarter, like almost perfectly in line. The Bitcoin DATs, the ETH DATs, the Sol DATs, everything was at like 1.3.
What's up, everyone? Welcome back to Shoot the Shit Pod number 15. I'm your host, Matthew Nay, joined by the team here. We got a couple of new people on the call. We're going to let them all introduce themselves. Jake, I'll let you go first.
For sure. Thanks for having me, Matt. I'm Jake Koch-Gallup. I've been at Messari for over a year, in crypto for nearly 5 years. I cover SWI, Polygon, a bunch of base L1s, as well as stablecoins and all things AI.
Nice. Yusuf, you're up next.
Thanks, Matt. Yeah, great to be here. My name is Yusuf. I'm a research analyst, been with Messari since March, and I also cover a wide range of topics, mainly stablecoins, L1 blockchains, privacy, and the like.
Awesome. Drexel.
Yep. My name's Drexel. I'm a research manager at Messari. I've been here for 3 years or so. Yeah, I mostly cover L1s, L2s, base layer stuff. Yeah, crypto class of 2017.
Nice. And we have Ryan AJC. You guys know him from previous recordings, but we have a loaded agenda here. We're going to give you a preview. By the time you guys are listening to this, I believe the Crypto X TradFi Q3 report is out. We're going to start with that. Go into some next-gen chains, corpo chains, and some of the MNAV MegaETHs of the world. Do we need them? Why do we need them? Etc. And then we're going to wrap with some ICM stuff about like MetaDAO getting hot, Pump, Metaplex Genesis, Believe, kind of get into the more corporate launchpad narrative. Let's start us off with the Crypto TradFi. So Yusuf and Drexel wrote this great long report. Excited for everyone to read it. But yeah, let's start with ETFs. Either of you guys could take this one. How are we doing? How are flows looking? The Bitcoin, ETH, I know we have one Solana one. But yeah, what's going on in TradFi crypto land with ETFs specifically?
Yes, I mean, Q3 was ETH's quarter. Because of the telegraphed buying from the DATs, there was just so much buy pressure on the ETFs as well. There was actually more total inflows into ETH ETFs than Bitcoin ETFs for the total of Q3, which, obviously is unprecedented. It's crazy too, because, the ETH ETFs launched in a much slower market environment. They were underwhelming. They were disappointing at launch for sure. People were conservatively hoping for kind of market cap equivalent buy pressure. It underperformed that for months and months after launch. So, the DATs telegraphing massive buy pressure probably helped people front run that. And that's likely a huge source of ETF buy pressure. But either way, it was still significant. So yeah, ETH ETFs, 8.6 billion inflows, Bitcoin ETFs, 7.5 billion in Q3. So huge quarter for both, but super significant for ETH.
Yeah, Yusuf, was it just like BlackRock kind of continue to dominate, or is there a little bit more like divergent in the flows into different products? Like, are other companies, I know Fidelity has definitely been up there as like the second one. What are we seeing, like the Grayscales and everything else, the non-BlackRock ETFs?
Yeah, I think that's been fairly similar, like in terms of hierarchy. Drexel, you might have some more insight there, but I think it has been BlackRock leading the way, Fidelity, and then I think Grayscale would be third there. Is that correct?
Yeah, so especially for the ETH ETFs, BlackRock dominated, like 58% market share at the end of Q3, and that rose across Q3. So like not only, what was ETF buying going up, but like BlackRock's share of that pie kept growing as well. For Bitcoin, BlackRock still dominates. They were not the biggest growth quarter over quarter. 21 shares actually percentage-wise grew the most. But yeah, I mean, BlackRock still has, vast majority, 58% of that as well, total market share. So
nice. And how did my neck of the woods, wearing the Solana hat right now, how'd the Solana ETF do?
I didn't cover the Solana ETFs too much. They were too new to launch. Yep. So yeah, we didn't really have a full quarter of data for them. So
yeah. I know it's still on the million scale, so interesting to see. But what about staking? I know the Solana one was a staking ETF with some Jito Sol in it. Where's the conversation to date on like Ethereum staking ETFs? I know that's kind of heating up, and looking for some regulatory approval, but curious what you guys found.
Yeah, so there was a launch of this Rex Osprey Ethereum staking ETF, which, like, I'll be honest, I can't fully go into the technical differences of how they got this approved, but they basically, it's structured as an actively managed fund instead of an ETF, so it's like under a different regulatory umbrella. I think Grayscale got staking approved like more recently, like even since the report was concluded, like very recently. So that'll be interesting to see, but I think a lot of the staking ETF wise is still kind of in a gray area. Doesn't seem to be like full on approval yet.
Nice, yeah. What about let's kick it over to DATs. I know that was a huge topic over the last 6 months recently, especially in Q3. Saw a lot of Solana ones go live and some of the other longer tail assets. And I'm looking at the report now, looking like a lot of MNAVs are converging towards one. What'd you guys find as you guys were looking into the DATs in general?
I mean, yeah, once again, the story was Ethereum. Like, an absolutely insane amount of buying from the DATs. At the beginning of Q3, ETH DATs held like 0.02% of the total ETH supply. And by the end of Q3, they owned a bigger percentage of total supply than even the Bitcoin DATs, despite MicroStrategy having like a 2-year head start. So finished the quarter with like 3.8% of the total ETH supply, which is just like, that's a crazy amount to have bought over the course of a quarter. As far as MNAVs go, I thought it was interesting that, despite Solana DATs and ETH DATs all kind of launching around the same time or kind of riding the same wave, those MNAVs rose to 4 or 5 at different times, but by the end of the quarter, like almost perfectly in line. The Bitcoin DATs, the ETH DATs, the Sol DATs, everything was at like 1.3. We had Tom Lee talking about the bubble being popped already. I'll be honest, it's like a little concerning for ETH, talking about going higher in the future when insane source of buying pressure may be kind of slowing down. So something to keep an eye on. But yeah, the real story for me is just like how much ETH these things bought in Q3. It's crazy.
Yeah, I'm seeing Bitmine is 2.5% of total supply just in itself. Is it really just like a Bitmine is leading everyone? Are they like, is it anybody else even competitive? Looks like SBET has slowed their buying down. And like, yeah, what's the competitive landscape with ETH DATs?
Yeah, I mean, Bitmine, SBET, and ETHM are the big three. ETHZilla, I don't even know if they're fully done deploying. That was another one that was a little more crypto native that was interesting, but they were sort of late to the party, and I don't actually know where they're at now as far as how much dry powder they have left to deploy. But yeah, as far as MNAVs converging, it's going to be harder for all of these projects to raise funds for additional purchases. So we'll see. I mean, if the market picks back up, then things, that flywheel can keep spinning, but it's going to be a little harder, I think, moving forward.
Yeah, what about the Solana DATs? Anything? I know we got the big one from Multicoin, Galaxy, and Jump guys. Obviously, they're kind of leading the story there when it comes to Solana DATs. But anything else interesting on the Solana DAT side?
Pretty small beans compared to Bitcoin and ETH DATs. I think they finished the quarter with like less than 1% of total Solana Sol supply. So, relatively insignificant buy pressure. And, there's all the speculation about buying locked tokens and whatnot as well. So it's unclear sort of how much impact it had on the market. Whereas with, the ETH DATs and then obviously like, MicroStrategy, that's got a pretty clear impact on the market over the last few quarters.
Nice. You guys look into like any of these DATs actually like doing anything with DeFi? I know the Ford guys are like telling people kind of like they're going to go and deploy into Camino, your Drifts, your Jupiter's lend product and everything. I don't know if that is that also happening over on Ethereum, or is that just kind of like all talk right now and no actual like on-chain deployment of these assets?
I don't think any of the larger DATs have deployed like on-chain for a yield or anything, but I do think that the staking element and having sustainable yield is something that ETH and Sol DATs have that Bitcoin can't offer. So, if you're looking at, sustainability, whatever that's going to mean for these things over the long term, like having a natural source of yield does bode a little bit better, but it's hard to know how much of an influence that'll have.
What's the latest on our favorite KOL of Bitcoin with Michael Saylor and strategy? How are they looking?
Man, their buys are getting smaller and smaller. So I know they keep breaking out these derivative products, and I can't fully explain to you how all these products interact and work with each other, but I do know that things have to keep going up, or they're not able to keep buying and issuing more shares. So yeah, slow quarter for Saylor.
Ryan, as a market participant, is this scary you? You're not worried about DATs participating, or you think we're fine without DATs, or what's your take there?
My take is the issue that the DATs are going to pose is kind of behind us, I think, at this point. Thankfully, none of the altcoin DATs, or actually any DAT except for MicroStrategy, like taking on debt. And debt is when stuff gets scary because debt is higher on the capital structure. So if you got to pay off debt, you have to, right? If Bitminer trades at 0.1 MNAV, like Tom Lee doesn't actually have to sell the ETH to buy back his shares. They don't have to do that. So I think the DATs provided like an interesting buyer. I'm not expecting them to become like forced sellers anytime soon. Also, especially like once you get down like the longer tail, because even if they do trade at severe discounts, like imagine trying to liquidate $100 million of Barra tokens or whatever, like you're just not going to be able to actually do that and get like anywhere close to MNAV. So I think most likely case, unless these start taking on like serious amounts of debt, is they're just zombie vehicles. They're just going to own a shit ton of supply. I really think the only ones that matter is MicroStrategy and Bitminer. I'm very curious to see what Bitminer does. I would not write them off as finished, just because like if you wrote off MicroStrategy as finished after last cycle, you would have been dead wrong. So I'm curious to see if like Tom Lee can do anything interesting with his DAT. But like outside of that, I'm not particularly concerned about any of them. I don't see them becoming forced sellers any point, but I also would not expect them to be serious buyers unless like the market starts going up a shit ton again. But I think that first impulse will be independent of them. So they could definitely be like a mechanism that drives a higher blow off top, but I don't think they're going to be the mechanism that causes the blow off top.
Nice. Let's change gears a little bit. Let's go over to like the stablecoin landscape of what happened in Q3. I cover Solana, so I know Solana just hit 15 bill. That's pretty big, but nothing in comparison to Ethereum. And like, so what was going on with stablecoins just in large? I know we had the USDH war over in Hyperliquid, but like the centralized issuers, Circle and Tether, are just killing the game. But what other stablecoins had interesting Q3s?
Yeah, I mean, the whole markets, continues to be in growth mode. I think we're at 290 billion today, or as at the end of Q3 in total stablecoins. When it comes to new and interesting stablecoins, aside from Tether and Circle, Athena's stablecoin USDe has really stood out this quarter. Its market cap is up 174.8% quarter on quarter. So it's currently sitting at 14.8 billion in market in like stablecoin supply. It's got 5.1% of the market, and I think that the growth that Athena has shown has really demonstrated that there is a sustainable demand for those delta neutral strategies that are used to generate yield on those stablecoin balances. And I think it's been one of the biggest breakouts against other stablecoin issuers.
Yeah, how are we feeling about synthetic stablecoins just like generally? I know we saw USDe, not really their fault, have a little bit of controversy with the Binance flash crash like a week and a half ago. I know obviously everyone's a little still scarred from the Luna crash, but like it seems to me at least. I'm curious your guys' your takes and what you guys think that like synthetic stablecoins can work. Athena's is showing that, and like curious what you guys think about that as well. Just synthetic stablecoins in general.
Yeah, I think they're definitely farther out on the risk curve than like a traditional stablecoin would, like a USDT would be. But under the right risk management mechanisms, if they are designed in a sound way, I don't see a reason not to use an algorithmic or stablecoin or a synthetic stablecoin. I think that when it comes to structured products, there's actually a lot of merit to using some instrument like Athena's USDe. So yeah, I think I'm bullish on more experimentation within synthetic stablecoins. I think Luna was definitely a moment that we should all remember. Similar to how people in finance today all look back at like the great financial crisis of 2008. I think we should, or people building synthetic stablecoins should look at the Luna crash as something similar to remind them of what could happen when things aren't designed properly. But I think that there needs to be more talent and time spent building those synthetic dollars out.
I think the crux of the whole synthetic... Oh, sorry, go ahead, Jake.
I was just going to say, what the biggest thing to look at is the custodian. And it's same with DATs, same with these synthetic stablecoins, is the custodial risk. So you can see how the custodian is handling the assets. So for Athena, for example, they're over collateralized, and they have a reserve fund. So just in case there's a flash crash or bank run or something along those lines, they have, I don't know what it is, 50 million, $100 million to allocate to that. So, people, there's not another Luna. So that's something you need to look at. And that's the same with why DATs might trade at a premium, is because you're betting on the founder, you're betting on the custodian of your assets to be trustworthy and to lead the vehicle in the right direction.
Yeah, I mean, I think the crux of the whole synthetic stablecoin issue is just that, like, in order to get significantly better yields, you're just that there is going to be risk somewhere. Like in a world where Coinbase is giving you 4 to 8% depending on what you do with your stables on the exchange, to dramatically outperform 8% yield on dollars, like you're going to be creating some sort of mechanism that inherently has risk somewhere, or that yield just isn't going to be sustainable. So like, to me, yeah, the crux is still the risk to reward, trying to kind of juggle that balance of having enough yield where it's an appealing product, but doing it in a way that doesn't stack on a ton of risk.
Definitely. Let's talk a little bit about like tokenized equities. We saw Galaxy tokenize their equity on Solana this quarter with Superstate in the opening bell platform. We saw X stocks take off over the summer as well. I think they're at like 134 mil right now. Surprisingly or not surprisingly, Tesla is the biggest one at 25, and then you got like a backed European, Nvidia, S&P. So kind of your like the meme stocks are taking off as X stocks as people are gambling on chain. But curious what you guys saw in the report. I know you guys looked into like the Robinhood layer 2 and they're gonna go and kind of do tokenized equities. But what'd you guys see there during your report?
Yeah, so I think tokenized equities are finally beginning to mature a little. You're starting to see signs of that happening within the market itself. It used to be the case that you'd have these like isolated companies, specifically crypto companies, who wanted to tokenize their equity on the blockchain. And so Exodus movement is a very big example of this. They're still they still have the most equity tokenized in circulation today, but instead of the chart just being Exodus and this like very small long tail of stocks, it's starting to actually mature into different ETF products. So for example, you have the S&P ETFs issued by both BlackRock and State Street. Those are all tokenized on Ondo today. You have Backed Finance issuing like Tesla shares, which are pretty popular as well. And so I think seeing more index-like products coming on chain shows me that the market's maturing. It's no longer this like one-off R&D, hub for crypto companies. It's actually becoming more of a mirror of traditional equity markets. And so that's what you want to be seeing within the tokenized bond space as well, and commodity space. You're seeing some interesting behavior as well, where gold is still 80% of all tokenized commodities traded today. But in Q3, we had the addition of some agricultural assets. So we had tokenized soybean products, tokenized cotton, and some soybean oil as well being traded via Just Tokens, 3 tokenized commodities. So all this to say, I think equities and commodities are becoming more mature. It's just been a little bit of a slower process than we might like or are used to in crypto, because regulation just moves a little differently.
Yeah, I guess question for the crowd. How close are we to like you guys actually storing some sort of relevant percentage of your portfolio or relevant value on chain in some of these products? Like I know a lot of them still have like decent slippage and aren't really tracking like one-to-one. Obviously you don't have like the true rights to the piece of paper of equity, which we all understand it isn't the best show of ownership and a share in some of these companies. But I mean, me personally, I think I have a $5 in a SpaceX pre-stock because I thought it was interesting and just kind of threw it in there. But I'm still definitely not the place. But I'm wondering, are you guys like keeping up with this? Like, are you guys like as soon as this is ready to go, like 100% and like comparable to a Robinhood or wherever you might a Charles Schwab account? But curious what you guys think from like a personal finance perspective from some of these products.
I've got no real interest in just like holding stocks on chain. I think that the unlock is perps being able to trade stocks. Like perps, I think, are a bigger unlock for stocks than just like having stocks on chain. But I mean, like, as an American citizen, like I'm not the target audience for perps on chain. Like they're are lots of people in the world who do not have the ability to open their Robinhood account and buy Tesla stock. And I think that's more the target audience for just tokenizing stocks on chain. Whereas being able to attach perp trading functionality to a stock is much more, appealing to me.
Yeah, I echo that as well. I have access to equities also as a US citizen. So for me, if I hold tokenized stocks, that just adds additional risks. I don't have insurance. There's custodial risk once again, and it's just less efficient than holding it through Charles Schwab or a neobank or some other financial institution that's regulated. I have in the past held Pax Gold. I think that's, a better way to access gold because it's one-to-one redeemable, held in Brink safes in London. And again, for maybe American citizens, private stocks might be a bigger unlock than publicly traded stocks, again, because we have access to it. So buying a SpaceX or XAI or one of these, or OpenAI, one of these private companies that I have a real interest in, especially doing on chain.
Yep, no, I totally agree. I think they're going to have a similar growth story to how stablecoins kind of grew in third world countries and countries that just needed access to the dollar, and slowly but surely they'll take off, and then eventually, who knows, 2-3 years from now you won't even need a Robinhood or a Charles Schwab. Obviously that's where Robinhood is kind of developing the L2, but let's talk about these corporate chains and kind of just next new chain launches coming up in general. I see in the report you guys looked at Circle is developing Arc, Stripe obviously developing Tempo just raised 500 million. Poached actually someone, a legendary Ethereum Foundation researcher, Dankrod. And so let's start with Tempo and kind of these corporate chains. You also looked at Kinexys by JPMorgan and the Google Cloud one, which is kind of out of left field, a little interesting. But what's the reason? Why do we need these corporate chains, these stablecoin chains, and just kind of if someone wants to give a bull case and a bear case, I mean, that'd be pretty interesting.
Yeah, I think I can kick us off with the bull case. I will say that this time around, the corporate chains are less focused on research and development. There's more of an emphasis on commercialization. So that's something that I've noticed. I think businesses in general see there's a benefit to their bottom line or to preserve market share. And so they're just investing their resources accordingly. I think that's why we're seeing Stripe, Swift, Google, some very serious organizations with established lines of business pursuing this route. The bull case to me is that traditional, for a corporate chain, would be the idea that traditional blockchains are not well suited to certain use cases in the world. Specifically, those are that are heavily regulated, but also rely on some off-chain component to get done. So for example, things like foreign exchange, delivery versus payment settlement, which is essentially when you have the delivery of securities that must happen at the very same time that you're paying for those securities. I think that something like that is not very well suited for an Ethereum or a general purpose blockchain. And so you would need someone to go out of their way, preferably a regulated entity with the distribution in that existing industry, to then build out the cryptographic infrastructure that would enable that to happen.
Yeah, I mean, the hard part for any new chain, which we'll talk about when we talk about MNAV and MegaETH, but the hardest part for any new chain is just getting users to stay and acquiring users and getting them to stay. And the advantage that these corpo chains have is when you have, Stripe on the back end, they have users, right? If they can just integrate this into the back end of their already existing products, they automatically get more users than any other chain on planet Earth, right? So I don't think this is a space where there's a bunch of winners. It seems you're going to have 2 or 3 in the same way that, you have PayPal and Venmo and only a few winners in that space. I see it being very similar kind of over the long term.
Yeah, and this is something that Yusuf and I covered in our stable chains enterprise report was, that distribution, it makes the winning chain. So like Drexo said, when you have 500 million users already or 100 million users already access in Web 2, and rather than giving that distribution and market share to an existing chain like Ethereum, Solana, etc., you build out your own, and then you can capture all of the fees from that. So it just makes sense for them to build out their own technology. And also, like Yusuf said, you can add in some compliance features or extra FX features or these other features that maybe you would need an app built on top of Ethereum in order to access this, but then you have some issues with compliance and jurisdictions and regulation. So yeah, to build out their own customizable chain makes more sense. And then on the flip side, we did look at some stable chains that didn't make sense. They had no existing partners, they had no distribution, so there wasn't really a need for those chains to exist, because at the end of the day, you're just, you're creating more silos in an already very siloed space.
Yeah, I guess my take on it is like Stripe makes sense, like you were saying, Drexel. Like the back end, they already have the users. But like when I'm looking at it, like it's like kind of Stripe versus everyone else. Like everyone else doesn't. That's where I'm not really convinced where they're going to get the users. Obviously, they have the brand name. Circle's going to be a tough one competing with Stripe. Google, Swift, JPMorgan's chain, like, yeah, they're going to force some people on it. But, like, the other ones, I just don't know where they're getting users. I wonder if anybody has, like, a counter argument to that, to where maybe some of these do stick around. But, like, the Stripe one makes sense. That's going to stick around. And they're obviously, they have a ton of money now, and they're getting some pretty great researchers, also within collaboration with Paradigm and Matt and everything. So I think they're going to be sticking around. But, like, outside of that, I don't see, I feel like this is just going to speed run the 2017, 2018 Corpo chain 1.0 era.
Yeah, I mean, you could look at, some of the stable chains we were looking at. It depends kind of who their direct customer base is, because some of them weren't looking for retail users like that would be using a PayPal chain or a Stripe chain or a Circle chain. It was more enterprises, B2B. So also, like, they don't need to be a giant chain. They can still make decent revenues with working with 1,000 businesses versus trying to target 500 million users, who are sending a lot more payments.
Yep, that makes sense. Let's kind of go over to something we're a little bit more familiar with, and that's just like general purpose L1s. And let's talk about MONAD. I know they just had their checker, their claim website, where you can go see like if you were eligible with all their different communities and tiers and rankings and everything. But why do we need MONAD? Why do we need these fast EVMs? Why do we need a MegaETH? Why do we need some of these new chains that are coming online? Or take the other side and say we don't need them. Up to you guys, whoever wants to go first.
I can steel man the bear argument for all these. Matt, I would like to hear from you your perspective on MONAD, considering I know you've been quite bullish, but I'll start. I think we're just kind of at the point where all the interesting apps in crypto that we can build are able to function fine on current infrastructure. Maybe in a world where Hyperliquid scales its user base like 100x, then like that becomes an issue. But like for the current user base that crypto has, I think the infrastructure we have today is serviceable enough. So I don't think, I think like trying to build infrastructure for like this next generation of users that are not here is kind of putting the wrong way. You should try to be building the apps that onboard these users. So props to MegaETH, at least for having like their accelerator, the MegaETH Mafia or whatever it's called. I don't know why I'm drawing a blank on it, but at least like they're trying to incubate some apps. I'm not as familiar as MONAD has been doing that. I'm going to assume they are, but at least for me, like it's tough for me to get really bulled up on any one of these next gen chains, whether it's L1, L2, if like they don't actually have like interesting apps being built on top of it. And it's tough to say if those apps are interesting until like the chain is live and those apps are live.
Yeah,
I hear you. Jake, you got it, and then I'll go with my piece.
I was just going to add on to the bearish case where L1s fetch the largest premium. So back in, peak bear market, late 2022, 2023, we're like, okay, what should we build? What will allow us to raise the most? And you had L1s. So again, I'm a huge fan of interoperability, and this just creates more fragmentation, more silos, as I was mentioning earlier. There's not a huge use case for them at the moment, and as we've seen in this market, kind of apps are the winners over chains. So if they can create a breakout app that onboards Web 2, then I'm all for it. But that can also be done on existing chains. There doesn't need to be an entire new L1 to do that.
Yeah, and we haven't even, think about Polymarket, right? Like Polymarket is definitely one of the breakout apps of the cycle, and it's not like Polygon, the chain, has, grown significantly in interest or usage even, or any like really important metrics. I think the most interesting things about MONAD and MegaETH is they're both kind of just like pushing the technical architecture to the limit for each of their respective models, right? Like MegaETH is not pretending in any way to do anything other than just juice an L2 like to the absolute max, and MONAD is, I think it's interesting that they're like are sort of re-architecturing the EVM landscape, and I think they're going to have parallelism like in a built into the EVM. So like it's cool that like from a technical perspective what they're doing, but I agree that we don't need more block space. Like we need apps and users that have a need for that block space. So it'll be interesting to see, but it's a little early to call.
Yeah, I mean, you touched on it a little bit, Drexel, but I think I'll take the other side. The bull side, obviously I'm biased. I like the MonAd team and some of their events and like the community. I think that they did a really good job with like just getting like a cult following from them and kind of like generating hype, and that's why they're so large and everyone talks about them. But the one-liner, right, for MonAd is like, if Ethereum was built today, what would it look like? Is MonAd. It's the EVM version of Solana. So like those two sentences definitely resonate with me, obviously, as a Solana fan. And I think you also see like during the flash crash during that Friday, you saw like people couldn't even get out of some of their positions on Ethereum mainnet. Gas prices spiked, even though the averages were down this entire year. The first time we actually had like a stress test, gas prices were just insane. So you can't really. So I think there is still some reason to build more block space and kind of experiment and kind of like what you were saying, Drexel. And then also you're seeing teams over in with Hyperliquid, like Hypercore and Hyper EVM, telling teams, send me the airdrop on Hypercore, because the Hyper EVM only does like, I don't know, 10 TPS at max, I think it was what Bread Guy was tweeting about, and I don't know what the gas prices or whatever were saying, but yeah, it was just a pain from like a UX perspective. And so that's what I'm excited about with MonAd, kind of like being a decentralized EVM built for today's purposes. And then I think there are a couple cool apps that I'm pretty excited with from the MonAd ecosystem that, I mean, obviously because it's EVM, you're going to have all the apps you love and know, like you're going to have the Uniswaps, the Aves over there. So day one, so you're going to be a little bit comfortable, which I think is going to be interesting with like a new chain. You haven't really seen that. I mean, when Sui, those guys launched, they were a different language, so the big competitors weren't there day one. So I think that's going to be interesting to see like a large chain launch with like apps you know and love and everything. But then also they're going to have all the classic. You're going to have more aggregators. You're going to have perp dexes over there, which are going to be interesting, I think, for airdrop farmers, users, testnet users. I think that'll be a good opportunity for you. Interesting to see how that's going to be over at MegaETH with their Mega Mafia, because MonAd's kind of gone a little different, kind of like a neutral to all their apps. But then there's a couple cool consumer apps I'm pretty excited about, like within the sports betting landscape. Obviously, you see that taking off with Kalshi and Polymarket. That are pretty interesting. There's Rarebet Sports, which is like a daily fantasy, which is pretty awesome using there on the testnet. We'll see how traction is day one. So kind of agreeing with you, Ryan, about like we got to wait and see. Launch comes out and see what the actual like users and metrics are saying. And there's also like Leverbet, which I'm pretty excited to see how that works out, because it's like leveraged sports betting on like a Polymarket scale of like you can go into a team at 40%, lever it up 5x. If they go down early, you're going to get liquidated pretty early, but if you ride a 5x leverage, you get, instead of 1.5%, you're going to get like a, what is that? Like, yeah, 7, 8, 10x on just a little sports bet. So I think there are a little bit. And then also like trusting the team with Keone and James. I mean, they were legendary over at Jump, just like in their traditional HFT quant trading. And so like, if anybody, it kind of like I said the same thing about like Solana engineers, don't fade Solana engineers, but also don't fade HFT jump guys. And like, if anybody can make a L1 perp dex that like is actually performant and compared to Hyperliquid, I think it's the guys that were doing it for 10, 15 years and we're pretty good at it. So like, honestly, cautiously optimistic is kind of the way I go, and then saying like, I think they have a great chance at kind of getting out of this like token launch down only a narrative that we've been seeing in the last year and a half, except for obviously hype. So hopefully MonAd as it launches. I know pre-market on Hyperliquid has kind of been like slowly down, obviously into the market where they launched that in wasn't the best. But yeah, I'm cautiously optimistic, I would say, for how this chain launches. And I think it's going to be interesting. It's a little different than some of the other L1s that have launched in the past year, 2 years.
Neither have released tokenomics, right?
Neither have released tokenomics.
Yeah. It'll be interesting to see. I mean, I feel like we've seen the VC L1, L2 token allocation playbook play out so many times now. 20% investors, 40% community allocation. Like, it'll be interesting to see if either of them, take a risk or change it up to try to differentiate in that way. Obviously Hyperliquid's the kind of the main example of really going the other route and it paying off for their token price. But yeah, that'll be just a kind of another interesting thing to keep an eye on when we get closer to launch.
Yeah, another thing I wanted to bring up, and Drexel, you mentioned Polygon. I think it's interesting that Polygon, you can make the case, has had like 2 of the breakout apps of this cycle with Polymarket and Courtyard. and yet it's had no impact whatsoever on its valuation. I was just checking out. Polygon is at 2 bill FDV. Monad is already valued at almost 4x that. It's 7.4 billion FDV. So like, unless your chain is like religious about implementing your native token as money, because both of the Polygon apps that I mentioned, like Courtyard and Polymarket, don't do that. They use USDC, not Pol or Matic or whatever it is. Like, unless your chain is going to be religious about that, like, I think it's tough to justify a high valuation even if your chain has breakout apps. Let's say all these Monad apps we're mentioning actually are great, but they all use USDC and no one uses Mon other than to pay the extremely small gas fees. Like, I think people need to really start rethinking how we value blockchains, and like, unless your blockchain is going to be religious about it becoming money in said ecosystem, it's really tough to underwrite any super high valuations here. So I would just caution people into like, oh, Monad's going to be great. That doesn't necessarily mean Mon the token will be great, and vice versa. There could be a scenario where Monad blockchain sucks, no one uses it, and Mon just keeps going up because people want to buy Mon.
Ryan, what about in a scenario where, and it's hard for me to come up with a specific example, but like, let's say MegaETH has some app that does not actually use the MegaETH token, but like literally can only exist on a chain that is capable of this insane throughput that they claim they're building, right? So like, maybe it doesn't directly have a price appreciation component to the token, but like MegaETH, the chain, has inherent value because it's the only chain that, you know, can host an app that is that like requires whatever this demand is.
How much?
Like, is that it?
How much can MegaETH monetize off this app though?
That's what I'm saying. It's like there's not like a direct correlation to like how it can be monetized, but
well, I think it's a lot easier for L2s. Like, L2 tokens are not money by no stretch of the imagination. Now, I don't know what MegaETH is going to do with the Mega token. I'm going to assume it's like every other L2 token, and they basically get a spread between the fees that users pay and the fees it costs to post back to mainnet. But like, again, like if MegaETH actually can't capture that high of a spread on whatever revenues the apps are generating, like why would I want to own the MegaETH token and not the app that's actually generating the value, even if it can only exist on MegaETH? But I guess then the argument can become like, if this app can only exist on MegaETH, MegaETH can justify a higher fee or capture from said app. But then like,
yeah, that's sort of what I was alluding to. Yeah.
But again, like, that all just surfaces in like what percent of the revenue is being allocated towards MegaETH versus the app. Like, if MegaETH's mode is truly like, we're the only ones that can build this chain, we're the only ones that can support these applications, then like MegaETH can probably justify a pretty high capture on the revenues. But like, if that's not the case, then they probably can't. And again, why would I want to own MegaETH over the app itself?
And that's not also like a very long-term moat, right? Like, there's always going to be the next fastest chain that's going to come around and match or beat their, you know, insane.
Yeah, presumably
TPS
they can.
as well.
The bull, if you're steel manning the bull case, it's like they build up some level of network effects that even if you do replicate their chain, no one's going to care at that point.
Right. You could fork Hyperliquid tomorrow, and it's not like
exactly.
So are you taking the bet that you'd rather own Pump? I mean, obviously, I know there's other token launchpads and other ecosystems, but you, in this it's a very, I don't know if it's the best argument, but like, would you rather own Pump than Solana?
I think Solana is one of those assets where it actually is treated as money. Like, even Pump Fund treats Sol as money and not Pump as money. So that argument is a little bit tougher to make with something like Pump. Now, again, like, if all these apps on Monad and MegaETH treat their respective tokens like how Pump treats Sol, then I think there is a case to be made for owning those underlying tokens. But yeah, like, I think a better example is, would you rather own Polygon or Polymarket?
Yep.
Like, you'd rather own Polymarket. Now, Solana's different because a lot of the apps on Solana do treat Sol as money. And if you do have apps that do that, you can underwrite the chain itself. But like, this is purely a social contract, right? Like, Pump tomorrow could say, actually, we don't really care about Sol as a monetary asset. We're actually going to pair our assets with USDC or Pump. Like, then I would definitely say I'd much rather own Pump than Solana. But like, this is all purely just social belief and social contracts amongst like chains. Like, there's no fundamental reason why Pump Fund has to use Sol as the monetary asset, but it does.
Yep. No, I see the distinction, and yeah, that definitely makes sense. Interesting. I think we're going to get the Monad launch sometime in early November, so pretty excited to see how that goes and see how everyone's airdrop comes out. I know they did a pretty good job with go-to-market and getting everyone kind of involved in their long-term incentives with the Monad cards and everything they did. So definitely took over the Twitter line every time they post something. But speaking of Pump, let's go over to like something I'm kind of like spitballing on the name, like what I want to call it, but like ICM, Internet Capital Markets, new resurgence there. We're kind of seeing like something like a corporate launchpad, like a more like legit launchpad wars going on between MetaDAO, definitely taking a lot of the mind share recently over the last couple of weeks with like their new ownership token launches. We saw Umbra launch there, raised over like 143 million in 3 days. We saw Vici launch recently. They hit some good numbers. Meta, the token for MetaDAO has done really well. Pump is now getting into kind of like more of like legit projects with doing like Dev.Fund and Biddle, where they're allowing everyone to get into the same price as that bonding curve is hit. And then you also have Metaplex and Genesis with a couple. They had cards, which did really well. They just did play Solana, which hasn't launched yet, but their pre-sales sold out in about 5 minutes, $2.5 million raised, doing a couple others. And then also Belief 2.0. I don't know too much about that, but I know Ryan does. And so like, what do we see? I think this is personally great for like everyone to like kind of lean into like more legit tokenomic projects, more like actual roadmaps. And I know this might be talking like NFT roadmaps scenarios back in late 2022 when everyone was talking about needs a roadmap for the NFT. But like, I personally think this is awesome, especially with MetaDAO and kind of the futarchy stuff that kind of like nerds types people, but like more just their launchpad itself and kind of like Pump leaning in. And when Metaplex also sneaky, just underlying everything on Solana. But what are you guys' thoughts on like this ICM 2.0 corporate launchpad wars?
I can't help but think it's a little funny that, from 2017, like ICOs were the thing, and it's like we've sort of just come full circle, right? We're just doing ICOs again, but calling it a different thing. I mean, at the end of the day, I do think that the ability for companies or projects to raise capital efficiently and, through crypto is still one of crypto's brightest use cases. And I think that there's a lot of iteration that can be done through these different launch pads and their different, strategies that there will be winners and losers. But yeah, it's hard to, I don't have a huge take on the different launch pads specifically.
Yeah, no, I would say like one of the common themes for all the breakout success of this cycle is actually like the really old ideas that finally like we figured something out. Like Hyperliquid was not the first perp dex. Polymarket was not the first prediction market, but yet they're the ones that find success. So just because something failed in the past doesn't mean that idea is dead. And I think like ICM, Internet Capital Markets, is probably the best example of this. Like I think one of crypto's superpowers is global capital formation. And also now we can pull in capital from not just any part of the world, but any market participant. Obviously, like, that also creates a huge amount of issues. And like ICOs in 2017 like failed for this particular reason. But I also think like people need to kind of have like more of a venture capital mindset to this stuff. Like you should be like, if you are going to participate in this, like you should expect 90% of your projects that you pick to fail. Maybe we look back on the ICO stuff as a failure, but like in reality, like some great apps did spawn out of that. Like Ethereum itself was an ICO. So I think part of that is just recognizing that like, hey, just because something's launching through one of these platforms doesn't mean it's going to be a banger of a success. And like people need to be aware of that and come in with that mentality. So more broadly, like, yes, I do think the general trend of projects raising through some sort of like crypto mechanism is only up and to the right. And like, I would imagine this is not just exclusive to projects building within crypto, but perhaps outside of crypto as well. Maybe we see off-chain entities also start raising through these mechanisms. But I would say like, if you want to bet on any one of individual of these launch pads, like it really just all comes down to deal flow. And at a certain point, you need to ask yourself like, what is the percent or how many good projects are going to launch a token or raise in a given year? Then you need to ask yourself like, okay, of those projects, like how many are actually going to opt to go through this like ICM route? And then you need to ask yourself, how many of these are actually going to go to my ICM platform of choice? And I would say that number is very, very small. I think MetaDAO is interesting because MetaDAO can really lean into being Solana native. And if like you're that bullish on like Solana being able to attract like good founders and whatnot, MetaDAO seems to be the best candidate for them to now raise through. Same thing with Pump Fund. Pump Fund is like kind of the opposite. It's going to attract really bad builders, but it's going to attract such a massive quantity of them. So maybe it's able to work out that way. But I'm skeptical on stuff like Believe, and if you ever see another pitch deck for another one of these launch pads, I really think like stuff like Coinbase now is really going to have a leg up here with Echo. They're just going to be able to paint a much clearer picture of like how the life cycle of your product? You raise through Echo, you launch on Base, and then you get listed on Coinbase. Like, how exactly is, I don't know, like, I think Meteor is launching one of these. Like, how is Meteor going to compete with that? I'm not sure.
Yeah, I forgot we should have mentioned whatever the rankings of crypto podcasts that are live today, whatever it is, we definitely just dropped one with Up Only hopefully coming back as Coinbase definitely they spent the 25 mil, burned the NFT that Kobe put on OpenSea, so excited to see them come back. I was a little too early in my crypto journey to kind of really dive into Up Only, but everyone talks highly of it. I've listened to some old podcasts and I'm pretty excited about that. But yeah, that's another competitor in the Launchpad wars with that's a good call, Ryan, with them bringing Echo into the fold, and now Coinbase kind of has the full life cycle. I know Binance has kind of done that with Binance Alpha, but yeah, the centralized entities are definitely coming into the fold, everything. And I mean, pair that with Zora. I know you're a big bull on that, and kind of doing everything with like creator coins and kind of doing the pump fund competitor there a little bit. But yeah, no, Coinbase is sitting in a great spot right now with owning the whole life cycle of a coin.
I'm also a fan of ICM for various reasons. I think the first one is the more credibility we can bring to the industry, the better. So when you have MetaDAO and, launching real projects with real founders with potential real revenue, that's much better than random shit coins on Pump Fund. So again, that brings credibility to the space. And then also there's, a big aspect of crypto and why we got in this is giving power back to the people, making, things more decentralized. So if we can create decentralized VCs like an Echo, or you can participate in these initial funding rounds without having to be access to this exclusive, group or a part of a VC that has, a billion AUM, that's better. It gives the lay person like us, retail investors, access to these opportunities that you definitely would not have otherwise in TradFi, and maybe not 3 years ago or 5 years ago in Web3.
Yeah, and I would say the original issue with internet capital markets may have been that the industry tends to over-index on the issuance of the token and doesn't really think too much about what happens once you've issued the token. And I think that's a reason why MetaDAO has been doing very well, is because they've aligned incentives between the token holder and the actual protocol themselves. So MetaDAO has, like, their ownership coins have this unique legal structure where they grant the token holders an illegally enforceable control over the DAO's assets. And so your ownership coins essentially ensure that the DAO and the token value are aligned one-to-one. And so I think like aligning incentives in this way is really powerful, as we've seen with the success of MetaDAO and its projects, and probably is the path forward to actually like realizing the vision for ICM. So I think like more work could be done in like, disclosing financials and doing other things that like crypto companies haven't done a great job of, to help investors and to help people building on those protocols navigate with more transparency. So I think that's also another part of the whole ICM meta that doesn't get enough attention.
Definitely, yeah. I've heard like the investor protections you have when you participate in some of these pre-sales or ICOs on MetaDAO is huge, and why a lot of people are willing to go and deposit. And also the short time frame too. Like, exactly when you're going to get your tokens in 3 or 4 days. Some of the other platforms, you have no idea when that actually is going to go live and the TGE is going to occur. So I think that's a great way. And I think personally, MetaDAO is leading the charge into this like ICO 3.0, 4.0, whatever we're on, the new Launchpad wars with legit corporate or more legit tokens and everything. But also excited for seeing maybe some non-Web3 companies, maybe like a Web2 AI startup or something coming in and using some of these platforms. I think that when that hits, it's just going to click for everyone outside of crypto and really take off. I think like Bio Protocol is probably the leader in that, with taking some off-chain bio projects that are kind of needing some fundraise. So interesting to see what goes on there. But I know we're coming up on time, so let's wrap it up with what are we doing on chain, our favorite segment. I'll go across as I see you guys on my screen. So Yusuf, what are you doing on chain?
I'm buying some Zcash and shielding it in my Zashu wallet.
There we go. Got to stay private in times like this. All right, Drexel, what are we doing on chain?
I'm on a rare winning perp trading streak. Other than that, I'm just sitting in a bunch of stablecoins still, man. So,
which direction is winning right now?
I've been doing a surprisingly good job at catching some of these bounces.
There we go.
Longing. Yeah.
Can't short. It's
No, it's against my religion to ever be short. So
exactly.
Yeah.
Exactly. All right, AJC, what are we doing on chain? I know you got some big announcement.
I do.
Zora TV.
Oh yeah. So I just wrapped up on Zora TV. I've been diving super deep into the Zora eco. I think it's fundamentally very interesting what's going on there, and there's a lot of experimentation to be done. I've been experimenting with my creator coin. I think we're at 1 million market cap, which is pretty cool. But basically have been just, doing my regular trading on FOMO now, which is a pretty good app, like it a lot, and then using some of the profits to buy back and burn my content coins, my creator coins. So been super active in there, just in the Zora trenches. I've been having a lot of fun. So yeah.
Yeah, AJC coin might have the better tokenomics than probably half the tokens out there.
Probably. Better tokenomics than Uni, that's for sure.
It's got some utility. There we go. All right, Jake, what are you doing on chain?
Yeah, for sure. I'm also following AJC's lead. I'm in the Zora trenches as well, even though my Jake Zero token has about a 20K market cap, thanks to one AJC buy. So maybe we need to show that a little bit. But yeah, also we're not in a bull market, we're not in a bear market, but there's money to be made. So I'm doing some on-chain stuff, like for example, that weed token that launched a couple weeks ago, found that early, started yield farming, growing my weed plants on chain. So took profits there. So there's always trades to be had. So I am in the trenches in that regard as well.
There we go. Yeah, I followed your lead and was a farmer for a couple days, grown some good plants. But also messed around with some of these like MetaDAO pre-sales. Those are fun. Did some like mini apps. I think is going to be a fun little narrative here soon on Pump Fun as like the market recovers and trends upwards again. Those are pretty fun. And then also participated in the Play Solana pre-sale. Like I said, I don't know when that DG is going to be, so that's something I was worried about after I did it. But I got my Play Solana Game Boy, so that's pretty fun playing around with it. The hardware looks amazing. Little software bugs, but I mean, it's a four or 5 person team, so can't expect too much. But excited to see that get built out, and yeah, looking forward to some of these launches, MonETH specifically, and just seeing what else is out there for the rest of the year into Breakpoint specifically for Solana. But everything consumer is getting excited. Hopefully, gaming resurges. But with that, this has been a great Shoot the Shit pod number 15. Thank you guys for everyone joining. Thank you guys for listening. As always, not financial advice. Do your own research. You can do your own research at Messari.io, where all these guys are going to have great reports. By the time this is out, you're listening. That crypto TradFi report is going to be live on the website. And like, subscribe, whatever you do with podcasts, wherever you're listening. But thank you guys. See you in a couple weeks. See ya.
Thank you.
Thanks, guys. See ya.